I'm here with Andrew, and we've recently released a white paper that looks at how climate change and the energy transition is shaping the outlook for infrastructure, particularly in relation to regulated utilities in the US. So Andrew, can you take us through the two sort of key takeaways from the paper and how some of those insights have translated into the portfolio positioning for the GLI team?
Thanks, Georgia. The paper is really written in two parts. So the first part looks at the opportunities that the energy transition provides to regulated electric utilities. Then the second part looks at the potential impact on regulated gas utilities. For the regulated electric utilities, we're very excited by the opportunities, firstly through decarbonisation. So this is obviously investing in renewables, but very importantly, it's also investing in the transmission and distribution networks required in order to facilitate that renewable investment. In addition to that, we're very excited by the potential for electrification. We're seeing that already in terms of on the transport side, in terms of light vehicles, but we also see further opportunities through the residential, commercial, and to a certain extent, the industrial applications. So this will create further load. It will also create further capital investment opportunities for the electric utilities. But most importantly, that load will ensure that the bills remain affordable, notwithstanding all of this capital investment for electric utilities. In terms of for the gas utilities, we very much believe that the gas utilities will play a very important role in the coming years and probably decades in terms of delivering energy. But in the very long term, we think the energy transition creates uncertainty for the gas utilities, particularly in the more moderate climates. So for these reasons, over the last couple of years, we've been significantly increasing our investment in regulated electric utilities, whilst at the same time we've been decreasing our investment in gas utilities. So we now sit considerably underweight the FTSE Infrastructure Index.
So just returning back to the comment about electric utilities, if we think about renewables, they really have scaled up in the past few years, particularly if we look at the trends over the past decade. So if we think about what's really driven renewables into the forefront of electricity generation, I think the paper is highlighting aspects such as the rapidly declining cost of renewables, increasing tax incentives, scalability, and of course policy change, which is driving a lot of the impetus behind renewables. And if we look at a decade ago, so 2010, I think it's around 11% of electricity generation came from renewables, whereas in 2020 that reached 18%. And IRENA, one of the peak energy bodies that's cited quite a bit in the paper, even says that level of penetration will have to reach 85% of electricity generation by 2050 to reach net zero emissions, which is quite exponential. But if we were to think about the rapidly declining cost of renewables, which I think is probably one of the biggest drivers behind this, we have a chart up here which is included in the paper, which looks at the levelized cost of energy. This chart nicely illustrates the stark decline in solar and wind costs between 2010 and 2020, with moderate reductions for combined cycle gas turbines and gas peakers. These trends will likely continue well into the next decade, and from our perspective, these will likely drive improved economics and further growth into the sector for the coming years. So going back to gas, which you mentioned earlier, Andrew, gas has potential as a storage solution because obviously renewables are intermittent. Solar and wind are dependent on the wind blowing and the sun shining, and of course investments in transmission and distribution will help overcome some of those problems, but they won't entirely. So when we think about natural gas, what other solutions are there that might be lower carbon, that might be viable and investors might want to be looking at this point in time?
Yeah, the paper discusses a number of technologies. We spent a lot of time looking at hydrogen, grey hydrogen, blue hydrogen, also green hydrogen. We also look at renewable gas. We're also watching very closely developments around heat pumps, particularly their effectiveness in cooler climates. All of these technologies we think will play an important role in the energy transition, but they also have challenges which need to continue to be worked through. It's worth also noting that whilst the paper is focused on North American regulated utilities, we're seeing the same developments in our companies around the world, particularly in the UK and Europe, and some of our case studies are indeed from those companies. So to summarise, we're very excited by the opportunities that the energy transition is providing, particularly for regulated electric utilities. where we see very large opportunities for capital investment and in a regime which earns attractive returns in a very transparent and stable manner.
Thank you, Andrew, and thank you for sharing your insights into the key takeaways of the white paper. And obviously, this is an exciting time to be investing in the infrastructure space, particularly in relation to the energy transition. So the white paper is, of course, available for our clients, and we'd be happy to have discussions with many of those who are wishing to learn more.